Assalamualaikum and a very good day. My name is Aina Abdul Wahab and I'm going to explain to you about the comparison of educational financing between Islamic and conventional in Maybank. So first, after you have decided whether to choose Islamic or conventional, then you'll have to choose between secured or unsecured educational financing. The difference between both of these are secured has collaterals such as property, like house or other securities such as ASB, while unsecured has no collateral, so it has another joint borrower that can help to pay the financing. This joint borrower must be an immediate family. Since secured educational financing is quite complicated and involves a lot of percentage values, so for simplicity, our discussion today will only explain about unsecured educational financing. So, in conventional, the process is very direct. When the student asks to borrow 10,000 for the study fee, then Maybank will charge some interest for the bank profit. This type of loan is not permissible in Islam because the direct interest charge is called as riba. So, to make it permissible, the bank will apply a Shariah principle of commodity Murabahah through Tawarruq Investment, where it buys a commodity first and sell it at a markup price agreeable by both parties, then the student has to pay the financing at deferred payment. So, how the commodity Murabahah works in educational financing? First, we will determine who are the parties involved. The financial institution here is Maybank. The customer is the student. The commodity seller and the commodity buyer will be the same, which is Felda, the FGB. Then, the commodity is crude palm oil and the facility is the study fee. So first, after the student requests to borrow 10,000 ringgit financing to pay for the UUM study fee, then Maybank will buy the CPO from FGB. So, the ownership of CPO falls to Maybank after Maybank has paid 10,000 ringgit to FGB. Secondly, Maybank will sell the CPO to the student at an agreed markup price with the interest and so on. But for simplicity, we will use the total payment student has to pay at the end would be 15,000 include interest. Therefore, debt is created at deferred sale. So now, the ownership of CPO falls to the student. Thirdly, Maybank will act as a wakil to sell the CPO on behalf of the student. Fourthly, Maybank will sell the CPO back to the FGB on behalf of the student and receive 10,000 ringgit from the FGB. Then fifthly, the bank will use the money received from the FGB to pay for the study fee of student to UUM. Then lastly, the student has to pay his debt at deferred payment to Maybank with total at the end of payment is 15,000 ringgit. Next, after we have understand the process of educational financing, now we will look at another comparison for both Islamic conventional. Firstly, is the definition. Both Islamic and conventional have the same objective, which is there are a financing that gives a facility to provide financial assistance fully or partly to degree or master's students at local or overseas universities. Secondly, the facility amount is minimum 10,000 ringgit with maximum 150,000 ringgit exclude insurance. Thirdly, the financing margin is up to 105% include insurance. Fourthly, the duration term is up to 15 years or at the age of 50 years old, whichever is earlier. Fifthly, the charge rate for both of them are just the same value. Only the terms used are different, which Islamic use the term profit rate while conventional calls it as interest rate. They also have the same base rate, but Islamic has an additional rate which is maximum charge rate that is called ceiling profit rate. That is up to 9.4% or different or 10% based on the conditions. Number 6, the repayment financing will have two steps, which are during the study period, the student will only has to pay the charge amount, but after the study has finished, the student has to pay the principal together with the charge value. Number 7, since we are Since we are discussing about unsecured educational financing that has no collateral but has joint borrower, so the rules for the joint borrower is that the maximum is 3 applicants that must be the immediate family members and must be between 21 to 70 years old only at the end of financing period. Number 8. Other charges that the student has to pay is 30 ringgit for the 3 copies of offer letter. Number 9. If the student unable to pay the payment on a given time, a late payment charge will be imposed with 1% per year of the overdue payments. Number 10. There are 2 situations that will involve a legal action to be made to the student if the student are unable to pay the installment payments or unable to respond to the notices. Legal action can affect the credit rating of the student in future, so notice will be issued to the customer first before any legal action is made. Lastly, if the student managed to pay the installment payments early and fully paid, a rebate or IBRA will be given with terms and conditions applied. However, in conventional, no rebate will be given. So that's the last one. I hope you learned something today. That's all from me, Aina Abdul Wahab. Thank you and Assalamualaikum warahmatullahi wabarakatuh.